Welcome back. Let's take a look at where markets ended the week as investors look ahead to key inflation data coming out next week on Wednesday. The Cleveland Federal Reserve predicting that consumer prices in April will jump nearly 0.5% from March and jump 3.5% from April of last year. Joining me now is Public Ventures President and Chief Market Strategist Lou Basenese. Lou, it's great to see you.
Good to be here,
Thank you so much for being here. I want to get your take on what everyone I've spoken with says is the big event for the week ahead, and that is the Consumer Price Index coming out on Wednesday. What are you expecting?
I'm expecting the fourth hot CPI print. I really am. I've been early to this, saying that we shouldn't expect any rate cuts whatsoever this year. We actually need a hike. That sounded completely contrarian and ridiculous a couple months ago. But now if you look at what we've gotten in all the inflation data for the last 3 months, it's been hotter than expected. And I'm sorry, but 1 hot print is an anomaly, 2 is a pattern, 3 is a trend, 4 would be a crisis. I really believe that. And I think it destroys the narrative that inflation is under control and that the Fed's next move is a cut, because I just don't believe that's possible. Well,
you were spot on in that analysis months ago. Now we're actually seeing potentially 4 months of hot inflation. Part of the issue is rent, right? Why is inflation so hard to rein in?
Yeah, if you look into dig into the data, it's really real estate, right? The rent prices are increasing, services prices are also increasing, and the problem is you cannot wrestle down the housing prices. It's a complete, and Mitch Rochelle, a colleague and friend, has been early on this too. It's really a supply issue, and we have a shortage of housing. No matter what you do, whether interest rates are high or low, that's not going to solve the supply issue, and that's just driving rent and or real estate prices higher. And then in turn, it's such a big component in the inflation numbers that it's reaccelerating inflation. I mean, this is akin to the late 1970s, where it looked like the Fed had inflation under control and then it massively reaccelerated. And I think that's the danger. That's the precipice that we're staring down if President Biden doesn't actually get serious and real about what's unfolding.
Well, I mean, you've got rent there, but you've also got food also higher in price. Fuel, oil is another issue. But despite all of these numbers, President Biden is adamant that the economy is thriving. He said inflation was at 9% when he took office, Lou. Actually, inflation was at 1.4%. And we know this. We've been tracking it. When he walked into the Oval Office, the CPI was at 1.4%. It did not tick up to 9% until 2022, after what? $6-7 trillion in spending. Overall, inflation is up nearly 19% under Biden. Credit card debt is above 46%. While real hourly wages are down, better than 2.5%. Your reaction and assessment of the macro story?
Yeah, I mean, it's amazing that he tries to say, well, the polls don't agree with me, so let me just dismiss them, and then give you a bunch of other facts that aren't facts. They're lies, or it's incompetence. I don't know which it is. Maybe it's a combination of the both, but as you pointed out, inflation's not under control. It started at 1.4%, ramped all the way up to 9%, and we're still well above where we started when he took office, and there's no end in sight. You know, I'll concede, again, I'll try and be pragmatic here. Closing that last mile of the inflation gap to the Fed's target is really hard, right? It doesn't happen easily, and we're stuck right now in that part of the market of trying to get inflation down to target. But for the president to come out and say that the economy's thriving, it's clearly not. We've seen the last GDP growth at 1.6% on the print. I think he said that, the U.S. has the best GDP growth in the world. Excuse me, what about China? They're still putting up close to 5%. Yeah, so, there's 50 other countries that are better than us in terms of GDP growth. Most of them are obscure and small, but you can't believe that the American public doesn't actually have access to the same data you're looking at. So you can't deceive us.
How is 1.6% growth the best growth in the world? Lou, real quick, you said this upcoming week got CPI. That's going to be real important. The following week, the big event is going to be the NVIDIA quarter. We'll hear from NVIDIA report earnings. I want to get your take on how to allocate capital right now.
Look, I think big tech has led the market. It's continued to do that. NVIDIA sets the tone again. They are, priced to perfection and have been still. They're growing tremendously. But here's what I read through on NVIDIA. You've seen the AI trend really take over the results for Alphabet, for Microsoft. It destroyed Meta because no one believes they're actually going to convert their investments in AI into actual profits. But I think it's key in the coming weeks when you look at NVIDIA's results that you see that AI growth trend is well intact, because that's really going to lead the market either up or down based upon that, because we really have a shortage of other things. It's going to be a couple months to the next earnings reporting season. We got another couple months for more inflation data. So I think tech is going to set the tone once the Fed sets the tone next week based upon CPI data.
All right, we'll be watching everything. Lou, great to see you. Thanks so much.
Good to see you too.